Hi students, in the last class we discussed the problems on the issue of shares, and in this session I am going to start the new units, which is the unit number 2, profit prior to incorporation. Okay, so it is also very important for your exam purpose. Okay, so it's very easy also. Okay, so now see, this is the profit prior to incorporations. Okay, actually there are 3 steps are there to formation of a company, and you know which are those steps to formation of a company. Okay, so the first step is what's promotion of a company, registration of a company, second one, and third one is a what, certificate of incorporation. Okay, so for this chapter, so this certificate of incorporation, it's very important. Okay, so for this profit prior to incorporation. Okay, so certificate of incorporation, it means what's on the registration of memorandum of association as well as the article of association and the other documents. Okay, what's the other documents? The registrar will issue a certificate known as the certificate of incorporation. Okay, so on the registration of memorandum of association and the article of association and the other certificate, other documents, registrar will issue certificate known as the certificate of incorporation. Okay, so the, or you can say the issue of a certificate is the evidence of the fact that the company is incorporated and the requirements of the Companies Act have been complied with. Okay, so this is about the certificate of incorporation. Okay, so now see in the next slides. So this is the meaning of profit to prior incorporation. Okay, so the meaning of profit to prior incorporation, just see, it is the profit earned or loss suffered during the period before incorporation. Okay, so before incorporation of the company, whatever the earned profit as well as the loss. Okay, so it is nothing but the profit before incorporation, and this profit or the loss is known as the capital profit. Okay, it is a capital profit, and it is not legally available for distribution as dividend, because company cannot earn a profit before it comes into existence. Okay, so whatever the profit earned by the business, okay, so before incorporation we cannot distribute that profit as a dividend to the shareholders. Okay, so profit earned after incorporation is a revenue profit which is available for dividend. Okay, and whatever profit earned after the incorporation, that is possible to distribute the as a dividend. Okay, the part of profit is distributed as a dividend to the shareholders. Okay, so this is the meaning of the profit to prior incorporation. Okay, so only 2 things you have to keep in mind. Whatever the profit is earning before the incorporation is nothing but the capital profit, and after the incorporation is nothing but the revenue profit. Okay, so this is the more important things. Okay, so now next, in the next slide, so see pre-incorporation and the post-incorporation period. Okay, so pre-incorporation and post-incorporation period, it means the period before incorporation and the period after incorporation is called as pre-incorporation and post-incorporation period. Okay, so whatever the period before incorporation is nothing but the pre-incorporation, and after the period of incorporation is nothing but the post-incorporation. Okay, so this is about. So now see in the next slide, steps to determine pre-incorporation profit and loss. Okay, steps to determine pre-incorporation profit and loss. Okay, so the first, there are 2 steps. The first step is what? First one, prepare a trading account for the whole period. Okay, so suppose in the problem, if it is the gross profit is not given, then it's necessary to prepare the trading account of the for the whole period. Okay, so first of all we have to prepare the trading account if it is the gross profit is not given. If it is gross profit given, then there is no need to prepare the trading account. Okay, if it is not given, then we have to prepare the trading account. Okay, so second step is what? It's very important steps. Okay, so calculate time ratio and the sales ratio. Okay, calculate time ratio and the sales ratio. Okay, so time ratio how to calculate this time ratio can be calculated by taking pre-incorporation and post-incorporation time. Okay, so this is, we will see with the help of the example how to calculate the pre-incorporation time as well as the post-incorporation time. Okay, so it means what's, just for with the help of this example, just try to understand from the example. Pre-incorporation period is 3 months. Okay, so see here, pre-incorporation period is 3 months. Okay, so this is the pre-incorporation time. 3 months is the pre-incorporation times, and post-incorporation period is 9 months. Okay, so these 3 months for the pre-incorporation, and this 9 months is the post-incorporation. Okay, so now see, therefore the time ratio will be 3:9. Okay, 3:9. Okay, so or you can see 1:3. How it is 1:3? Take it common factor and divide it for both this factor. Okay, so take it common factor is a 3. 3 ones are 3, 3 threes are 9. Okay, so this is one ratio will be the 1:3. Okay, so like this you have to calculate the ratio. Okay, I hope all of you understand. So this is the pre-incorporation period and this is the post-incorporation period. So 3:9 is the ratio. Take it common factor and divide it. 1:3 it will be. Okay, so the sales ratio can be calculated on the sales taken place during pre and post incorporation period. Okay, so in the problem they will mention, so for this pre-incorporation purpose what's the sales and what's the sales for the post incorporations, they will mention in the problem, and you will, like this only you have to calculate the ratio. Okay, so see in the next slides example, with the help of this example we will understand the pre-incorporation and as well as the post-incorporation. Okay, and we will calculate the time ratio. Just see here, Lion Limited was incorporated on 1st August 2014 to take over the running business of Mrs. Happy with assets from 1st April 2014. Okay, so the account of the company were closed on 31st/3/2015. Okay, so now see here, this 2014, what's the financial year start? So just here, it starts from 1st April 2014 and its end with the 31st/3/2015. Is it clear? Okay, so in this problem the financial year start from 1st April 2014 and its end with the 31st/3/2014. Okay, so this Lion Limited acquired the business of this Happy company. Okay, so this Happy company acquired by this Lion company on which day? On 1st August 2014. Okay, so on this date the company is incorporated. Okay, company is incorporated. It means what? Before this month, before this 1st August, whatever the month is there. Okay, so it means what? This start from April month, May month, June month, July month. Okay, and after in the month of August it is incorporated. Okay, before incorporation how many months are there? 3 months are there, and after incorporation up to close it will be the 8 months are this. Okay, so with the help of this information we have to calculate the time ratio. Okay, so next, in the next slide, solution, calculation of time ratio. What's the pre-incorporation period? So see here, pre-incorporation period is, it's 1st April 2014 to 1st, it means 1st August 2014 up to 1st, it means what's 30th July. Okay, 30th July or 30th July up to 30th July, it will be the 4 months. Okay, so this 4 months nothing but the pre-incorporation period. And what about the post-incorporation? After this month, after this 1st August 2014 to 31st/3/2015, it will be the 8 months. Okay, so the time ratio will be the 4:8. Just see here, time ratio is 4:8. Okay, for this take it common factor as a 4. So 4 ones are 4 and 4 twos are 8. Okay, so it will be the shortcut. It is a 1:2 is the time ratio. Okay, and the calculation of the sales ratio, the appropriate information is not given in this problem to calculate the sales ratio. If it is given the sales for this, for the pre-incorporation period, this much of the sales, and the sales of this much of the sales for the post incorporation. Okay, if it is given, then it will be the easy to calculate the sales ratio, but the information is not given in that problem. Okay, so now see in the next slide. So this time ratio, whatever we calculate this time ratio 1:2, with this time ratio we have to allocate these expenses, the salary as well as the rent and taxes. All these expenses will give common. Okay, so these expenses we have to distribute with the help of this time ratio. Okay, salary as well as the rent and taxes, insurance, repairs, depreciation, bank charges, electricity, telephone, printing and stationery, postage and telegrams, office expenses, management expenses, general expenses, sundry expenses. All these expenses we have to distribute under this time ratio. Okay, so which are those things are distributed under the sales ratio? Just see here, these are the variable expenses, gross profit, commission, discount allowed, bad debts, traveling of salesman, carriage on sales means carriage outwards, selling expenses, delivery expenses, packing expenses, free samples, sales promotion expenses. These all these expenses is distributed in the help of this sales ratio. Okay, so I hope you will be understand. If you have not understand, just you can ask me, I will take it. Okay, so just try to understand this problem. Okay, so Lion Limited take over the business of this FP and is incorporated on 1st August 2014. Okay, and it's this year started, this business was started from the 1st April 2014. 1st April 2014 to 1st August 2014, whatever months is there in between, so is nothing but the pre-incorporation. And after this means after this month up to this close the financial account or the finish the financial accounting, at the end of the financial account up to this, it is the post incorporation. Okay, so just try to understand, it will be the it is easy to understand. Okay, so I hope you will be the understand. Okay, so thank you.